Hello and welcome to the Ticks lesson today on the definition of the term continuation and how traders apply it to the market. When and where and why do we want to know this definition? Well, let's start with Webster's version first. The act or fact of continuing in or the prolongation of a state or activity. Resumption after an interruption, something that continues, increases, adds, and related words elongation, extension, lengthen, and stretching. Now let's just think about this for a second. If we got to choose an action or activity, so as traders, if we got to choose an action or activity that we're going to repeat, prolong, stretch, increase, add, and we'd even allow it to have some bumps along the road. We'd allow an interruption or two and a resumption of interruption, and then we'd still come back to the pattern, repeated pattern of stretching and adding and prolonging. If we got to choose that type of market activity, do you think we could make money on that repeated action? Something that we could clearly see in time to make a choice to participate? So how and where do we start? Well, we have to have a reference point. Always understand that your reference point is in the moment in time. Are you wanting to trade in this reference point, or are you looking at your history? So let's look first about, again, why as traders do we want to know this? Well, if I'm bullish and the bulls take firm control of the market activity, okay, or I'm a bear and the bears take firm control of the market activity, understand that it's one or the other. So whoever's in control is trying to establish a trending action. Trending action means that we're going to get something started, and that great big first impulsive move out of either one of them establishes who's in control. The bigger and stronger that first big move, it can be measured. Trader discretion often about the type and where you start your measurement, as always. But basically, it's a measured move in price. It's a measured move in price. And then this pause that we take, we call it a pause. We call it a take a breather. You had expended a lot of energy here on either side, and you need to take a little breather. And that's what our resumption after an interruption. After an interruption. We're still looking for the trade, but comes next. So this is where our continuations patterns come in. We look at this measured move activity like it's a big flagpole. And then we look at this part two as this breather activity on either side, bear or bull. That breather activity, that interruption, we look for our geometric patterns there. Flags, pennants, triangles, rectangles, all kinds of patterns. But the bottom line is, we're looking for a trend continuation pattern, meaning we're looking for this interruption to be nothing but an interruption, and we're going to resume that trending, stretching, and prolonging action. And that's what we're looking to trade. And the more you get comfortable with trading and you see that these patterns repeat over and over again, and you get to watch the volume and you trade your market and you look in your time frames and your money levels where you're trying to trade, and you learn that these patterns do repeat. Look at the red areas. Look at your big prolonging areas. Do you think you can make money on that? And again, notice you're not having to trade that whole first part. You're getting to watch and see that first part, and then you're getting the follow through. So thank you very much, trend continuation. I think I can make money from that. And I can also clearly see that when it's a bullish trend, at some point, it's going to turn into a bearish trend. That is called a reverse of trend, right? Very simple. Reversing trend. It's either bulls or bears. And you have periods in the reverse, and that's what's in between. Up and down, up and down. And that's why as traders, we have a reference point. This is a nice big chart just to show you a big example, large time frame, price on the right-hand side and volume on the bottom. But just to give you an example, we have a great big bullish move higher, and yet how many stair steps along the way? also represented great big bearish trending opportunities. Now on our website, you'll find that we have this individual, especially the more common patterns outlined for you with a video and a text description and chart samples of each one of those individual patterns, as well as work done on them as a collective group, either the bulls or the bears, so you can get more expertise in there. And I also have been adding library videos on how to trade them with real chart data. So this was video 1's area here, big bullish move higher. Then video 2, we took what did it take to get a reverse, was the message. What did it really take to get the reverse where we could turn into bearish continuation all the way back down? So we worked both of those videos right here in this current picture that I'm showing you. The point is, break it down, and you're going to break it down as traders, and we're going to keep working on this, but you need to understand very early on that history is very important for you to understand your instrument. Understanding who you trade with and the kind of patterns that they create, because history repeats and repeats. Understand that the reference point for you right in this moment in time should still include this history. Okay? But it's always going to come back to you where you are right now in your process. And here at To The Tick, I hope I have lots of great educational material for you. Come and subscribe and join us. And again, like I said, plenty of material for you to start getting involved with. Thank you, goodbye, and I'll see you again soon.